Beginner traders who first start trading will often find that trading is difficult. As you gain more experience, more knowledge as time passes by, you'll often find that trading can actually be quite simple. But believe it or not, trading can actually be rather boring. Especially when markets are slow, there are no exciting moves to capitalize on. These are very dangerous market conditions that can often trap traders into trading out of boredom. These slow trading conditions can cause emotional responses in traders that can influence trading decisions negatively. This week, I have suffered a large losing streak on my account, my live account with Vantage, and also my prop trading account with the prop firm, the 5%ers, which I will talk more about with you guys towards the end of this video. But more importantly, what I want to share with you in this video is how I handle a large losing streak and how to bounce back. Let's go right to the basics. Step number 1, stop trading. Stop, cease, no more live trading. If you feel like you need to carry on trading, go to a demo trading account, protect your capital. That is step number 1. Step number 2, it is crucially important to review your trades that you have taken. Find out where you went wrong. There's got to be an answer in there somewhere. If you don't currently review your trades, or if you're wondering what my process is, do drop a comment below and I will talk more about that in a separate video. This week, when I looked at the screenshots I had taken of my trades, when I reviewed my losers, I made a pretty astonishing discovery. And that was that very few trades that I took actually matched with my trading plan. This nugget of information alone showed to me that if I had just followed my trading plan, I could have avoided a huge losing streak. Simple, right? But how do we maintain focus and discipline in times when your emotions have the better of you? Everything feels hazy and confusing, and it is easy to make the wrong decision without even realizing that you're doing it, only to feel stupid later when you are thinking clearly once again. Unfortunately, there is no science, no clear answer to combat trading emotions. There are only techniques that you can employ to help guide you along the way. And today, in this video, I'm going to carry out a technique that I always return to when I have had a losing streak. Really helps to realign my focus and to clear my head, and that is, of course, backtesting. Backtesting is a wonderful way to solidify a trading plan, to practice executing each steps of your trading plan and to completely reaffirm your strategy. Backtesting helps us to remember our process when trading, which will hopefully help to avoid straying from our trading plan again in the future. Although I sometimes like to use the software Forex Tester 5 for backtesting, today I'm going to carry out my backtesting process in Tradingview, which is the platform that I use for all my charting, just to keep it simple for you guys. Tradingview do have a free trial available if you're not already with Tradingview. I have got a link in the description below. You can sign up for free and you can follow me along. Please remember to like and subscribe to the channel, and let's get straight into the content. Okay guys, so I have just switched over to the computer here. I'm on TradingView charts and I've loaded up pound dollar. And I'm going to try to keep this as transparent as possible, as fluid as possible. I'm going to try to limit the editing that I do, only editing out any tongue twisters or mistakes that I make. But mainly because I want you to see my process that I carry out when I backtest. And I have just spotted that the way I am sitting, my stag painting makes it look like I've got some little horns. Maybe that's just because I've been naughty and had a red week. Right, anyway, let's get to the video. What I like to do on the charts when I backtest is, first of all, just write out very simple prompts, steps of my trading plan to help me to just keep on track with my backtesting. And that's what I've done just here. These are the very simple main steps of my trading plan. So my day trading, my intraday Forex trading plan, this is going to be just on pound dollar. That is the main pair that I like to trade. And it's based on a plan that comprises of trading the news, I don't actually trade the news release, but I wait until the news release, which for me is 1:30 till 4 o'clock GMT, because that generally creates sort of volatility in the market. And I like to wait for this to settle after that news release before I get into a trade. I like to analyze using the technicals, the larger structure. So this is using the top-down analysis, using the daily time frame mainly and the 4-hourly, to see whether we are going up, whether we are going down, where we're likely to pull back to, where price is likely to reach. And then I also like to analyze intraday structure as well. This is really important because it is intraday trading that I am doing. And then the basis for actually planning out when I get into the markets comprises of a break of a daily key level, which is either the previous daily high or the previous daily low. I also like to take into consideration break of session highs and lows, and also institutional price levels, their areas of confluence, or I may use them for profit targets. These will all be demonstrated in what I'm about to show you in my process, but that is what that is for, my little prompts. Okay, I had to just pause the video to just tend to the boys, guys, so I'm going to just sort of pick up where I left off. So, getting started backtesting. First things first is I'm going to click on replay here. That will open the ability to just remove present day data and go back in time so that we can use historical price data to carry out some backtesting. So this isn't going to focus on live trading. I'm not trading the live markets. We're using historical data because it's about practicing our trading technique, about practicing trading rather than trying to make money. So I've just gone back in time to Tuesday the 29th of August. I've gone back to last year. This is actually summer trading time, so this should be interesting. So I'll just bring my notes back over here so we can just follow this along. The first step is news. Now I'm trading a set time period between 1:30 and 4 o'clock GMT. Oh, sorry guys, I've got something in my eye. And so this time period is usually when news has already been released, because news is generally released for the dollar at 1:30 GMT. Unfortunately, Tradingview shows when the news is due out as well. So, for example, the 29th, this day, it did come out at 3 o'clock. It can sometimes do that. So I will just keep an eye out for that to cater that into the trading plan. But the next step is larger structure. So let's have a look at that now on the daily. And we can see that price has been making a higher high and a higher low. So it's been in this uptrend. We made a new high here. We've been sort of selling off here. But then we got this bearish close that closed just below this previous pullback. So that could indicate that we're going to start to see a sell-off. It's usually quite interesting to see the way that price pulls back. It's not a gentle pullback. This is quite a steep pullback. So a lot of sellers have come in here. And this is an interesting point in the market here because we are in a period of pullback. So it's not the best trading condition for intraday trading. Ideally, you want to wait to see if we get a bearish support being made, because at the moment price is pushing up. So I probably wouldn't trade this next day anyway. Right, because it can tend to be quite choppy. What I'm waiting to see is if it breaks the high here, or if we get a bearish close, and then I would be more interested in intraday trading. Okay, so we've got an inside bar forming. An inside bar means that price ranged this day, this Thursday. The fact that it's summer trading as well, that's why I'm not so keen to just jump into this backtesting, because this is what I would practice in the live markets. That's the point, is practicing your trading technique. And so with this being an inside bar candle, if the next candlestick breaks the high of these two, it's a good indication price is pushing it up and maybe best to look for longs. And vice versa, if it breaks the low of both of these two candlesticks, then we'll be looking for shorts. Right, so that's quite a nice strong bearish candlestick down. We have broken this inside bar candlestick, this range here. So this would mean that, for me, I would take this to mean that it looks like the trend is going to start to just go to the downside. Now that was the Friday, so let's just start backtesting from the Monday. And something else I like to do as well on the daily, just to mark some levels to watch, is I use my Fibonacci, and I like to go from the nearest pullback, because I like to just see if prices is likely to pull back to an area in the daily where it's likely to pull back to. And because I'm looking at this sort of short-term downtrend we've been in, price has been making lower lows, just looking at the bodies here, and lower highs, made a new low here and a new high here, which was confirmed when it in fact made this low here. So what I'm going to do is use the Fibonacci tool. I'm going to go from the high, the previous pullback, the bodies only, and drop it at the low. And it brings up these three levels that I like to call optimum trade entry. And that's actually where price pulled back to here, and we've got this perfect inside bar form. So if on this Monday we get another retracement up, this is just a level to take into consideration. If it breaks and closes above that, then it could be pushing up. But I just like to have that on the charts for reference. And let's drop to the 1 hour lead time frame and just move this on in time. So it's currently at the open to 9 o'clock here. So Sunday, 10 o'clock, let's skip this on. So just skip this on in time on the 50-minute time frame to the 1:15 close. We're at the New York Open now. And you can see that price has actually had this big sell-off from this Fibonacci area in the daily. We've got a retest of this here, and it's been selling off, which is a nice indication to look for shorts. But I want to add on some indicators to this chart that I like to use, and that is firstly the round numbers and below. This shows the institutional price levels that I like to use. I like to add sessions, which is just an indicator to help me to keep an eye on the different session times. Red is the London and green is the New York. And then the daily high and the low indicator, that's the previous daily high here, previous daily low here. And where are my notes gone? There they are. I'm looking for a break of these key levels together with intraday structure. And the thing that draws my eye from this is this leg here. From the fact that the daily from the daily time frame, we're looking at shorts with short bias, and the fact that we got a push up to this fib, price sort of consolidated, and it's been selling off. So Thursday we made a low, Friday we did make a high, but we got a strong push down here to the lowest point. Now if I use the fib again, but now we're using this on intraday structure, and go from the previous lower high to the low overall, it brings up these three areas again of optimum trade entry, and this places them quite nicely in line with the institutional price level and also another key level. So this was the previous daily's low over here. And so at the moment, I'm just moving candlesticks on because there's nothing obvious to get into. I'm not ready to get into a trade just yet. I want to see price either come and do something interesting in this area or break the key daily level. At the moment, price has done nothing, and that was Monday, and that sometimes happens with trading. You can have a plan and you can have areas you're watching, and price can just do nothing. And that is what I'm talking about with the danger of boredom trading, because sometimes it's just not optimum conditions to trade, but you want to trade, so you get in anyway, and that's very risky. That's why we backtest, to see how easy it is to get emotional. Anyway, I'm going to just go to the 1 hour so I can skip this on because it's 2 in the morning and I need this to be a lot later. So I've just moved this on in time to, once again, to 1:30 GMT when I like to trade. And you can see that we have got this nice downtrend forming, but unfortunately I've not found a good place to actually get in that matches my plan just yet. It didn't pull back to this intraday level, but it has made a new level. So let's zoom out so we can see that. Once again, we've got a low here, a new lower high, and then price has made a new low over here. And so we can go from this previous structural level, which was yesterday's high, add the fib, and drop it at the low to give us an idea for where price may retrace it back to, which again it lines with this institutional price level. And we can see here that intraday we did get a break of the previous daily low. During the London session, there was a nice retest and there was an opportunity for a short there, but I don't trade the London. I can trade the London, but I tend to stick to New York because it just works out better timing for my personal life. I find it a bit easier to get onto the charts at that time. But there was an opportunity in there. In fact, I'm just looking at this little reaction and intraday, looking at intraday structure here, although I'm looking at this fib tool, I can look at the intraday structure and see that obviously we have just been in this downtrend, making lower lows and lower highs. And if we use the most previous lower high here, we could maybe calculate a better entry for a short. So I'm going to just get my Fibonacci tool again. Drop it at the highest point of the previous pullback because I'm looking for short, and drop it at the low here, which brings up these three levels once again. Now what I like about these three levels is they actually coincide with this line I drew out. Now this marks on the daily chart the lowest point, so that's actually a key daily level in itself. Now we've already broken the previous daily low, we've already broken a key daily level, so I know I'm in the right direction, and this just is another area of confluence to solidify this as a trade plan. So I'm going to set an entry here for a short, and I like to set it at the lowest of these three bands, so I'm going to set this at 70, and my stop, I like it to be above the pullback, so it's going to have to be a large stop. This is actually one of the largest stops I would use. I tend to use 10 or 15 pips, sometimes 20. We rarely use a 30 pip stop, but the market's obviously made this big movement, so I'm going to have to step it up to match that. And my target would be a 1.5R target, so let's just place that there and see if we get triggered in. So we're into that short, price is pushing up. We've got a nice bearish close here. Now with that pattern, with this plan, and this is where trust comes in, trust in the plan, I would then add to the position. So I would set the same order again and open up another position size. Now this is something that I can do because I manage my risk to take this into consideration. I'm not advising you to double in up at all. You've got to manage your own risk. You've got to calculate what you're comfortable risking on your account, whether that's 1%, 2%, 0.5%, whatever that is, that's for you to figure out. So I would consider doubling up here and targeting the next institutional price level, which is just over 2R, to try to get some more profit. Because to me, that's looking good. We're obviously in this downtrend. And that's what it involves, is once again finding my steps. Where did my notes go? And just ticking them off, making sure that you are doing your steps. So news, there's no news here, that's fine. I'm in the right time period. The larger structure, we're down. Intraday structure, we're down. So I'm going in the right direction. We've got a break off this level, break of the session highs and lows, and IPL, institutional price level confluence. Well, I'm using that as a profit target. And so I'm going to just see how this works out. As you can see, I had to go into the next day's trading session. So this took quite some time. We actually came up, we tapped this previous daily low, so that could have been a better place for an entry. Again, just taking into consideration those key daily levels. During the London session, the next day, we got another retest of that, but then price is sold off. So the market is just not moving very quickly. It's taken a full 24 hours, but it has hit that target. Which is quite nice. So that is 3.5R profit because I added to my position. And guess there's quite a lot of interesting lessons to be taken from trading, taken from backtesting. The thing that stands out to me with this is, although it's really good to backtest, you've got to always take into consideration time. Time is really important in trading, what time you're backtesting. And I don't just mean the time of day, which is equally as important, but I mean seasonally. This trade was taken at quite a quiet time of the year because generally institutions, banks, professional traders will have some time off for summer, kind of matching up with the school holidays. And this is that transition between summer to getting back into the game, I suppose, of the market. It could be why it took longer for the trade to come to its resolution. And so it's important to remember that concept when backtesting, because this might not represent an average day trading as I'm recording this today in June. Although saying that, I'm kind of glad to backtest this because it's good to remember how slow trading can get during summers, to be prepared for that. And it's just all these little lessons that are just really good to just add to your trader's toolkit, add to your journal. It's all part of refining and making you a better trader. I wanted to do some more backtesting examples with you, but as you can see, backtesting is quite a long process and I don't want this video to go on too long. I don't want to take up more of your precious time, but you can see from that alone the process that I follow in backtesting, how useful it can be, and of course how helpful it can be, especially if you have had a losing streak. Now, for those of you who do like to see how I progress with my trading account and my prop trading account with the 5%ers, I'm going to just spend some time now logging onto the dashboard and sharing with you showing you the devastation that has happened this week for me, unfortunately. And I promise, guys, I have genuinely got something in my eye. I'm not that cut up about my performance this week that I'm crying on camera. I think I've got a rogue eyelash or something, so just excuse me while I figure that out. But as you can see here, I've taken a massive step back this week and it is painful. I admit it, it hurts, because last week when I did my recap with you, I was halfway towards my target. This week I have lost half of my progress. It's been a whammy of a bad red week. And it's disappointing. I'm disappointed in myself, which is annoying, and I'm trying to be kind to myself because, you know, having those kind of feelings and emotions just don't help. And in this moment, I share this with you guys in the hope that you can take something away and apply it to yourself that will help you out as well with your own growth. But for me, I think it's good to just sort of see where you've gone wrong, but then also to just try and forgive yourself, because at the end of the day, we're all doing the best that we can. And having any kind of negative feelings towards yourself is certainly not going to help. So for me, yeah, I am a bit disappointed in myself, but do you know what? Forget that. Forget that disappointment. I do not accept that, because I refuse to feel any negative emotion and feeling towards myself. I'm doing the best I can. I am trading as well as being a full-time mother. I've got a teething baby. I've got a toddler who has been pushing the boundaries this week and testing me. And I've got a lot of other stuff going on. So the fact that I'm still determined enough to even attempt to trade, I think is freaking awesome. And that's what I'm choosing to focus on this week, is my progress. Yeah, it's unfortunate I've taken a step back, but you know what, guys? I'm still green. This account is still alive. It's still green. The world isn't going to end tomorrow. I've got time. I've not got a deadline. That's what I love about this account with 5%ers. There's no deadline of time. So I'm not worried that I'm going to not hit the target in time. I've got time. I could take a week off. I could take 2 weeks off if I wanted to just have some time out and reset. Maybe that's a good idea. But it's really good to just kind of have this one-to-one with yourself psychologically and check in and just eliminate anything that's bad. You know, there's nothing bad in the world. You don't need it in your head. You don't need it in your life if you can remove it. So that's what I'm doing right now. But this, in my opinion, is why trading is difficult. You know, it's difficult from the technicals, the actual process of trading, of learning and understanding news and technicals and risk and all of that side of trading is difficult, but it's doable. You can learn it. But the bits that you don't see, the psychology, the discipline, the mindset, the emotions, the repetition of it, that to me is what makes trading truly difficult. Because if you are not able to regulate yourself, if you're not able to recognize when you need to take a step back, to be mindful. And if you're not able to handle losers and still move forwards, that is what makes people stop trading. So this is the part I think that a lot of traders or a lot of YouTubers, a lot of people don't share. And this is the part that I think is actually crucial for people to understand. So I hope this has helped you out, giving you an insight to what it's like from a trading psychology perspective. If it has, please help me out in return. Let me know by hitting the like button. Don't forget to subscribe to the channel. And thanks for watching. I'll catch you in the next video. Bye.